Hi guys, thanks for tuning in to another episode of Nuggets News. Well, another massive week behind us, and we've really seen cryptocurrency dominate the global financial headlines. It's really becoming intertwined, and hopefully you're starting to understand why I've been talking about this so passionately for a couple of years now. And thank you to everyone that has supported us. We've passed 60,000 subscribers this week. We've nearly doubled during what's been a pretty rough time for crypto. So I thank you all for taking interest in not only the crypto side of things, but the finance and economics that I know, it's a real passion of mine, and it's just so great to see other people taking interest in it. Particularly our premium members. We've got a raft of exciting announcements coming out. We've got a new member portal. You guys get the daily email breakdown of everything that's been happening. So over 1,000 people that have stuck with us through bull markets and bear markets. We're really grateful for your ongoing support. Let's get into the local news though, and I do want to just wish everyone well and hope no one is affected by these fires that are happening throughout Queensland and New South Wales. There's saying that it is going to get worse this week, so really unfortunate stuff. We're not even in summer yet, and we know it has been really dry across Australia, so stay safe out there, guys. Let's start off with some positive news now, and our trade surplus in Australia has come in bigger than expected. That was really driven by our iron ore, natural gas, a lot of those commodities which we are reliant on. So as long as those prices stay high, the government is running a surplus. But as you guys know, I want the government to get out there and start spending more and structural reform. I think our economy still needs a real shake-up. Otherwise, we're not heading in the right direction. And it's headlines like this that worry me. So retail is now at the weakest levels since the 1990s, and people are not spending. Even those the tax breaks they got, it was meant to stimulate the economy, and it is just not happening. A lot of the banks reported terrible profits this week. Westpac tumbled 16%, cutting dividends. This was another thing that I warned about. Whether it's crypto or stocks, just because something is paying a big dividend or reward, it doesn't matter if the underlying price is going down. So something to be aware of. I think the best days of banking are behind them now, and it's time to look elsewhere. At the same time, we know that this was going to happen. Headlines about crypto being used for, terrorism and all the bad stuff just in time for the cash ban. We saw Australia, Peter Dutton come out and say it. The FBI said it the next day. The war on cash that's heating up, we know that they are going to target crypto. So be prepared for those headlines. Something else we've seen in the housing market was cladding, and there's Freedom of Information Acts trying to find out which buildings are affected. And I've been talking to the engineers and the builders, and they say it is completely rife out there, but people don't want the truth to get out because the price of their investment apartments is going to crash. It's going to affect the builders. Everyone in that food chain. So that's not nice situation for anyone to be in, and I really worry what's going to happen. So I think obviously housing and going out to the suburbs is a lot safer, but anything got built in the last few years in a real rush and was done by cutting corners, I really hope that none of you have been affected by that. So the REA boss has come out and said that this is about as bad as it can get, the worst market for property in decades, and starting to talk about the contrarian mindset. So people are now saying, well, if it's the worst it's been, is it time to start considering buying? And that's the message that we're being fed. We've seen a sharp rebound in the premium suburbs and the premium houses. Whether or not that rolls over again remains to be seen. And to me, it really just depends on what they do in terms of interest rates and QE. And I think that really benefits those that already have a lot of money and wealth rather than those that are looking to get into the market or trying to save up their first deposit. But Martin North and I did our detailed breakdown for those that want more information. I wanted to head over to Saudi Arabia now. They've got a huge IPO coming out. This will be, I think, the biggest IPO in history, taking this oil company private. But their economy is in a lot of trouble. They spent so much money on building, just like we've sort of seen in Australia, a massive, massive boom. And now they've actually got laws, and I've got friends that live here, where you're not allowed to say the economy's bad. And they've got undercover police that'll go around and ask restaurant owners, how's business? And if they say not good, they can get huge fines and even jail time. So again, something that I only heard very recently. I didn't realize that was how bad the situation was. But another example of the media and government not allowing people to simply tell the truth and talk about how it is. Over to China, though, where auto sales have fallen 6% in October. That global recession, Carmageddon, as they're calling it, is really affecting these manufacturing nations. The auto industry has been tanking, globally, and then we can see in percentage terms there how much vehicle demand is down. So obviously, the biggest purchase for most people is their mortgage if they have it, and then their car, their student loans, and then credit cards. And now we've got all the afterpays and whatnot of the world. So we're seeing, whether it's retail, cars, mortgages, we're seeing that all come through. People are strained because they're not getting the wage increases. Now, China have made the move to cut rates, add them to the list of central banks that are creating that easier monetary policy. Now, remember, the risk here with cutting rates, like we've seen in Europe and Australia, is that it weakens your banks and their profits when they're running those fractional reserves. And China's banking system is very fragile. I've got a huge video coming out this week about everything that's happening in China with the banking system and crypto with a friend, Davi Wan. So look forward to that one. China are, pumping money into technology, though. They want to be the world's leaders, whether it's blockchain or, 5G. They're only just rolling out 5G, the fifth generation, wireless internet, and they're already talking about 6G and, truly incredible speeds that a lot of people wish they had in Australia. It'd be nice for people to have even good 4G in Australia. It would be faster than some of the broadband internet connections we have in some suburbs. Now, speaking of the trade war and that tension between the US and China, the US are already moving to ban the Huawei 5G technology, and we've seen the Apple sales really fall in China, and they've started to support their own. I spoke about that last week, so it's tit for tat at the moment in the phone market, in the technology market. Now, at the start of the week, we got this news that, we're going to start to roll back these tariffs. We've got the trade deal. Donald Trump's promising that everything is great, and futures absolutely jumped. We had stock markets at new all-time highs. While a lot of people have been predicting a stock crash, I've been saying that I think the stock market's going to keep going up as long as we get rate cuts and more QE. Valuations and fundamentals are out the window. So the stock market's jumped to record highs. Later in the week, we found that that's maybe not the case. There's no tariffs that have been delayed or cut back just yet. One of these stats that I've said a few times in different presentations, and you might have heard it, was that the number of adult diapers in the world has now surpassed the number of baby diapers. And it's that aging population that is one of the biggest threats to government spending and global debt. People that have been promised pensions, retirement funds, healthcare. This is just one of those statistics where you tell people in everyday conversation and start them down the rabbit hole about how banks, debt, and money works. And just little things like this, where simply the amount of people trying to pay the amount of retirees, mathematically, it just doesn't work out. So that's why government debt and the Fed's balance sheet is going to have to continue to expand. They're saying that, it's not QE. We've seen the overnight repo rate jump again recently, up to $250 billion since this crisis began a few weeks ago. Now, remember back when they were printing money, it was to the tune of $40 billion a month. And here we are, and they're saying, well, it's only every night. It's not quite the same thing. Oh, we're only buying a few bonds here and there, a bit of liquidity in the repo market. They're starting to talk about other things that they're going to get a little bit funky and creative with, but, it's not QE, guys. It is insane that this is happening, and I'm a bit shocked, to be honest, that gold has sold off sharply this week. So we have been expecting a pullback since that huge run. I'm looking maybe to buy some more gold and silver for an entry point once this correction's over. But money is risk on again. Everyone is flooding back into stocks thinking the bull market's back if the trade war is off. So expect gold to bounce if those trade war talks aren't going well. Now, we've seen Goldman Sachs CEO come out and say that negative rates are a failed experiment. No surprise there. Negative rates hurt the banks. We've seen how much Deutsche Bank and the European banks are struggling. So, US banks, and they're going to be affected as the US Fed have started to cut rates as well. They are next in the firing line. They're going to lose their bonuses and whatnot. They're going to cut all the staff first, but the guys at the top know that they're in for a rough ride. As I said before, the best days of banking are behind them. A lot of the big commercial banks these days are getting into derivatives and investing. It's no longer the business loans, mortgage loans, the traditional sort of banking. It's all these risks that they're taking. And more we're seeing that the traditional method of trading and valuation and fundamentals is out the window and being absolutely overrun by these quants and programmers. So a lot of people doing uni, doing their degrees, coming out into the world of Wall Street and being told, well, actually, no, we're hiring the guys with the computer background, the maths background to program these algorithms. And again, that is something that worries me because 90% of the market is now using algorithms and trend trading. And we've never been in that position before in history. So what happens? We don't know when markets start to turn down. How do these algorithms work in a bear market? Do they just withdraw all the liquidity and trading? We've seen flash crashes. It's just a bit scary that we've got guys that aren't even investors that are basically running the market these days. More retail stores closing. Sears closing a third of its remaining stores. All this is moving online, being absorbed by the giants, Amazons and whatnot. And if you look at the indexes, the ETFs, a lot of those tech stocks are still holding them up. So the number of stocks at record highs is actually quite low, even though the overall stock market is breaking out to all-time highs. And it's just an example of corporations that have got so many benefits and, offshoring their tax. And, it's so hard to be the small guy these days, which does really suck. And I know firsthand how hard it is to run a startup business in these countries that have relatively high tax. And it's no wonder that people want to move to these lower tax regions. Now, options traders are abandoning their hedges. So what we're seeing here is the put to call ratio. So people are not buying puts. Now, puts are an option that you buy to protect yourself from market declines. Now, I've done detailed learning units on this if you want more information in our members group. But basically, this is the protection. If stock market has a crash and you've bought some puts, you can think of it like insurance. And people, as you see, this is an extreme level now where people are just not interested in puts. They don't want the protection or insurance. They think markets are just blasting higher no matter what. So is everyone getting too euphoric? I've got a few more charts to, let you know this thesis. And I think we are heading towards a big blow off top, absolute craziness in stocks. So what we see here is an assessment of market sentiment, and it really is growing aggressively here to a level that we haven't seen since before the last market crash. And this has been one of the most hated bull markets in history, you will hear people say. And it's getting to that point now where everyone's saying, well, you know what? This is good. It's all bullish. Let's pile in. And that happens right before the decline, as you can see here on a number of occasions. Now, it can be a small decline. We've had false positives there, but you guys know how much emphasis I put on sentiment. If everyone starts to get euphoric with everything that's currently happening around us, it's just another reason I'm being wary. Along with the fact that CEOs are stepping down at a record pace. Again, the highest levels since the last financial crisis. The rich see the writing on the wall, as the headline says here. They've done so well. Baby boomers have accumulated wealth. America's richest 1% now own as much wealth as the entire middle class and lower classes combined. And what are these guys doing? A lot of them are moving to other places, as we just spoke about. With they can get way more bang for their buck, lower taxes, no stress. They're not worried about riots or civil unrest. They're going to get out of there, get out of Dodge while the going's good. And again, it's something that really frustrates me, and I think governments are going to be left to hold the bag and clean up the mess. We're seeing Mike Bloomberg running for president in 2020. So a lot of people didn't think Donald Trump was going to get in. He was like 100-1 odds when that all started. And at the time, I'm not going to say that I predicted it, but I thought after Brexit and the civil unrest we're seeing, I think it's actually a good shot. A lot of people loved to hate Hillary Clinton. And I know that divides our US audience because it really is 50-50 between who loves who. And there's so many reasons why you can love or hate either of them. But just these examples of, I guess, politics becoming a bit of a popularity contest. And with the number of prime ministers we've gone through in Australia, I think it's a matter of time until we get the people elect some sort of colourful character, a Boris Johnson or a Donald Trump, because people are just sick of what's been going on. They want change. Now, global debt has officially topped 188 trillion. The unfunded liabilities are far higher than that. The derivatives markets are, a factor of 10 bigger than that, again in the quadrillions. But it is official that the global debt continues to charge higher. 37 central banks are now participating in stimulus and easing. If you've been watching the channel for some time, you'll know that we've been predicting this. When everyone else was saying that everything's great, central banks are going to normalize, interest rates are going to go up again, you're going to be able to buy a bond or put money in a high interest savings account and get 5%, it's all going to be fantastic. There's no such thing as free money, guys. This has to come to an end. The piper has to be paid at some point, and more countries are firing up the printing press. It's currency wars, and it's going to be one of the most bullish things for Bitcoin. I think Ray Dalio sums it up really well here. The system is broken. Read this piece that he put out. Google it. Ray Dalio, the system is broken. It's absolutely brilliant, some of the work that he's been putting out, trying to warn people. He's very bullish on gold, and a lot of his arguments can obviously be used for Bitcoin as well. Christine Lagarde, she's the new head of the ECB, the European Central Bank, coming out and saying that we should be happy to have a job rather than to have savings. So slowly and surely, they are trying to normalize this. When did they decide that people are not allowed to save money, or that savers would be punished? Be thankful you've got a job. We're going to have deeply negative interest rates, and you're not going to be allowed to save any money, but just be thankful you've got your job. When does someone stand up and say, hold on, this is not normal here? How is the first homeowner meant to save up a deposit if they've been penalized for saving money and the rich are benefiting? We're going to continue to see civil unrest. Now, guys, it's never been more important to protect that nest egg as you can. A big thanks to our sponsor, New Brighton Capital. If you are interested in managing your own self-managed super, they've got that free consultation. Ring up and find out if it's for you or not. They can help you get gold or Bitcoin in your self-managed super. We're looking at something very interesting, a bit of a fund, a bit of a portfolio to get in your self-managed super, to get in your investment portfolio, because there's just not a lot of good ones out there that encompass the gold, Bitcoin, and silver side of things. And these guys will allow you to have those in your self-managed super. Over to Europe now, as we get into the crypto news. There's a lot of overlap with what's been happening in traditional finance, and the EU are looking to regulate stablecoins but not issue their own. So we keep hearing mixed reports about they're going to do it, they're not going to do it. The same in the US, but it's certainly stablecoins that seem to be targeted at the moment. Whether or not they can't regulate Bitcoin as much, this is kind of the discussion we've seen in Congress and in a few interviews recently. The Fed are hiring a payments manager to research digital currencies. Look at these headlines. If you had told me that even 2-3 years ago, that every central bank, every news headline in the world would be about crypto, Bitcoin, stablecoins, blockchain, it is really amazing to watch what's unfolding, and we're just setting this big global awareness base, I feel, for the next rise in price. Once people start seeing the price go up, everyone is now aware and familiar with crypto. Very exciting to watch all this unfold. Malaysia are the next ones to impose a cash ban here. They've gone for the 6,000 number. In Australia, it's 10,000. They're already proposing 2,000 in Australia and Malaysia. That's going to be continued to reduce down. The IMF have said that they can't have negative interest rates until they've completely phased out cash effectively. DX Exchange was a guest that I've had on the channel, and they've had to shut down temporarily. They've seem to be running out of runway. It hasn't come on as fast as they'd like, but I did speak to Daniel. They're looking for investors. They're looking to time it. This has been a terrible, 12 months to launch an exchange and security tokens. There's still so much uncertainty. I think they were fairly early, but they're not going away anywhere just yet, but definitely shutting down for the time being. And, I guess you can say another one bites the dust in some regard. This is the flushing out of those companies and waiting to see if they are strong enough to survive till the next bull market, until we get more security token certainty and trading. Silvergate Bank is one of the most crypto-friendly banks. They try and get all the crypto-related businesses and projects nice and safe and secure banking. They're going public. So again, more crypto companies just becoming legitimate. They're now listed on the New York Stock Exchange. Really cool stuff, and another way for people to get exposure into those companies without investing in crypto assets themselves. Last week was an absolutely crazy week for crypto exchanges. we saw BitMEX get hacked, all those emails, the Deribit flash crash, Coinbase had a flash crash, FTX had a bit of a lawsuit slapped on them by Binance. I spoke to CZ over Telegram on Sunday night, and he said, look, it's pretty far-fetched. We're friends with FTX, nothing to worry about there. Binance looked to be branching out, moving back to Beijing. Binance US adding the BNB token. Bitfinex is playing the blame game here, and actually looks like they're going to be right. We saw Bittrex with the SIM swap attack, Independent Reserve going green, and just this afternoon we've seen a bit of a war of words between Duodex, our friend Bitlord, and FTX. So again, this is something that I hate seeing in the space, the bickering, and it doesn't help our cause as a professional industry. So look, I hope everyone sorts it out, and there's plenty of room for all these exchanges. Binance have expanded to support the euro. The Russian ruble is a big one there. And I believe, was it Kazakhstan as well? Let's scroll down. I don't want to get that one wrong. Let me know in the comments, guys. I believe it was the KZT currency there. Tunisia is the next one to issue a stable coin, central bank digital currency with Russian developers. Look, everyone's pushing back against Libra, but all these governments are trying their own central bank currency. It's the ultimate monitoring program. We're going to dive into that again with Dovi this week about what she thinks about the Chinese currency and their monitoring program. EOS becomes the latest blockchain to get fully congested thanks to an airdrop. So I spoke to my friends at EOS. They said, look, this isn't ideal. It was poorly designed, but look, EOS were one of the people that were throwing a lot of crap at Ethereum when CryptoKitties clogged it up, and now we're seeing an airdrop clog up the entire EOS network. The whole point of only having the 21 validators is to have that high throughput. So these are the things that we still need to fix up and iron out these bugs, because this isn't going to work on a large scale when things like this are still happening at a time when it's pretty quiet in the world of crypto and blockchain volumes. VeChain have announced a partnership with Foodgate. Again, their cross-country, cross-continental blockchain logistics continues to be one of the most common applications we see of this technology. Volvo using blockchain to trace cobalt in their batteries. So, look, lithium went through a bit of a boom. Cobalt and copper, also heavy metals that are really critical to battery technology, and these things really interest me. I'd love to have a guest on the channel. I don't think I can score Elon Musk, but if you guys are interested in this type of thing, renewable energy, obviously we interviewed Power Ledger last week, and they had another exciting announcement just after we interviewed them with Power Club in South Australia. Another first of its kind. So these projects that are trading below ICO price, the tokens are gradually getting more and more utility. So look, that's the reason why I'm happy to hold and continue to support these projects like this that are making progress in the real world despite the bear market. Webjet have launched another blockchain-based booking verification. So look, the list of things that blockchain is being used for continues to grow every day. Constant tickets, supply chain logistics. It really does my head in. We had more Bitcoin maximalists come out this week attacking Australian projects, and myself personally for supporting them. And I just don't know how they can say that Bitcoin is the only blockchain that's ever going to be used. It's literally wrong. It's already happening in the real world today as we speak. Another cool little project is Arweave, and they're very similar to Storage or SIA, where you can store information on a decentralized ledger. They raised $5 million, led by Andreessen Horowitz, who have been one of the biggest crypto funds. So another project I will look into for permanent online decentralized storage. They've also launched the A16Z guys, a crypto startup school. So they want to pump out more of these crypto startups. I'm not sure if the focus is going to be all those ICOs that went crazy in 2017, but what they have been able to do are pick the gems. They were early investors in Maker. If you go to their Ethereum address, they've recently invested in Synthetics as well, which is fantastic to see. And I don't think that news has been made public yet, so a bit of a hidden one there for you guys. This week, we also saw Stellar burn a very large percentage of tokens, 55 billion, and surprisingly, price only jumped 15 or 20%. So It just shows you that these models are so hard to value at the moment. Someone said to me, well, the number of tokens they've burned actually increases the percentage that is owned by the team. So does that make it more centralized than before? So there's all arguments for and against this sort of thing. But as a general rule of thumb, the crypto community loves a good token burn. Reducing the supply should be good for the price with the basics of supply and demand. Tezos did get a big jump this week, 25%, as Coinbase announced that they'll be adding staking. So this is one where you can get a 5% annual yield. But again, don't be sucked in by that 5% number. Just like the bank shares we spoke about at the start of this episode, 5% doesn't mean anything if the price of the actual token has dropped, say, 30%. So something to be mindful of. There's lots of proof of stake projects. What I'm worried about is that everyone is just going to have them on Coinbase and Binance, and there's only going to be a few nodes, a handful of nodes. They're not really decentralized. That wasn't the intended purpose. And that's where I know Ethereum will be staked, I'm sure, on Binance and Coinbase and the like when it comes out. But the more of us we can have in our own little pools or running our own computer and our own node, it actually genuinely makes the network more decentralized. Speaking of decentralization and mining, we've seen news this week that China is not going to push forward with their plans to ban mining. So I don't want to dive into this too much because of the interview we've got coming up with Dovey, but look, the Chinese weather has affected energy and the amount that's freely available from the hydro dams because of the dry season. But look, the hash rate's only fallen a little bit. Every week it seems we get a headline about how mining is going to crash with the halving, but it's really something that I'm not worried about at all. One of the Chinese miners that does have some worries, however, is Bitmain. So we saw Jihan Wu come in, overthrow the current leader, and all sorts of legal action being thrown around here. Again, another discussion point we're going to dive into with Dovey, so I won't get into that. But we did see Chinese tech giant Tencent granted a Hong Kong banking license to open a virtual bank. So these brick and mortar banks in the real world are now facing stiff competition from all the online banks. Something like ING in Australia, where they don't have any branches, is becoming really popular, and a lot of the time they can offer lower fees because they have less staff and less overhead. So look, all this competition in China with the Chinese digital currency that's on its way, it is really heating up, and all these guys are going to be in cahoots with the government. You can bet your bottom dollar on that. MoneyGram CEO has come out and said that 10% of Mexico-US transactions are leveraging XRP. So the Swell conference this week was a bit of a letdown. I think we saw a lot of people buying and speculating into it, expecting a pump, and that was the pump that had already happened. It was definitely a sell the news type event. A lot of positive news, people coming out. I'm going to try and interview Coinfield this week about issuing assets on the XRP ledger. 300 companies supposedly using the system. Whether or not it's using the XRP token still remains to be seen. I find it really hard that if there's that many companies that were using it in any meaningful way, price could still be down over 90% from the highs. So look, let's wait and see what we get out of this interview in regards to XRP, but hopefully that's an even, unbiased assessment, as I know there was a lot of people really disappointed with what happened at this World Conference. One of my favorite projects, Maker, has increased the debt ceiling, or the DAI ceiling as they call it. So they're slow and steady. They don't want this system to grow out of hand too fast. They need it to be balanced, and it has survived a full market cycle now with the CPDs working according to plan. So I did a big detailed write-up for members this week about MakerDAO and how I thought $500 was an extremely good value for money, and we blasted through $600. So a nice 20 or 30% trade for you guys there. Certainly one that I'm continuing to hold as we approach the multi-collateral DAI, and I'll let you know exactly what you've got to do for that transition going forward, particularly if you do have a loan at the moment. Another huge bit of news for Ethereum this week was Microsoft unveiling the platform for minting enterprise-ready crypto tokens. So one of my dreams has been that all this experimenting on private versions and forked chains of Ethereum ends up with the big boys using the public blockchain. And that is exactly what we're seeing here. Microsoft, one of the largest companies in the world, streamlining the process for all these companies and their partners to issue tokens on the Ethereum blockchain. Very bullish news. I know it's not reflected in the Ethereum price at the moment, but I think that's basically because of the uncertainty as we approach the Ethereum 2.0 transition. Standard Charter accountants joining the Ethereum Enterprise Alliance. It is a long list of huge corporations that are working with Ethereum. Facebook's David Marcus has come out and said that he doesn't see Bitcoin as a form of currency. And in this interview, he spoke about Libra and all the stable coins being the currencies, the method of payment. He actually said he sees Bitcoin as digital gold and a store of value. It's almost like they're realizing they can't really compete with Bitcoin on that angle. And that's one of the reasons why, even if all these currencies go ahead, they're ultimately, at the end of the day, they're pegged to fiat currencies that have all the debt attached to them and need to be debased. So I still think it's a bridge and not competition for Bitcoin. I've spoken about that at length, but at the end of the day, Bitcoin is that ultimate hard money. Another cool bit of information we had this week was from Plan B, who's behind the stock to flow ratio, and he was talking about the carry trade here. So for those that don't know what a carry trade is, if you can borrow one asset and sell it somewhere else, similar to arbitrage, if people can borrow euros or US dollars with negative interest rates, they're being paid to get that money. So if you can get paid to borrow money and put it in Bitcoin, particularly at the moment while we've got backwardation with the futures. So if you're not familiar with backwardation and contango, now we have futures markets that have a price of Bitcoin in the future. If the price is higher, it's a no-brainer. And I won't go into the mechanics of that exactly today, but just know that if something has a higher price in the future, you can borrow money, particularly with negative interest rates, to sell that asset at the higher price in the future. And it's almost a risk-free trade in some regards. So very cool to see these markets maturing, the derivatives, the options side of things. And again, I've done some units for our members about options, and maybe we'll do one about backwardation and contango if you like. Redshift is another cool, innovative project that's come out this week talking about using Ethereum and other networks on the Lightning Network on Bitcoin, obviously that second layer. So being able to use Bitcoin itself or Ether to pay Lightning invoices, opening up the, interoperability, compatibility, and utility of the Lightning Network. So check out redshift.tech. Head over and give them a follow on Twitter. This is the sort of stuff which I haven't seen anyone talking about, and how exciting being able to use Lightning Network with other tokens to pay invoices. Huge news this week that Square have reported a doubling in the number of first-time Bitcoin buyers. I think the stats were something like 8% of all newly minted Bitcoin. Again, I did a detailed write-up and thesis about that mining supply, the dynamics of how that relates to supply and demand. And after the halving in May, if these numbers just stay the same, let alone growing, Square would be buying 16% of all the new Bitcoin that comes into circulation. So it's been absorbed up, and this is without a bull market. It really is highlighting the scarcity in that new supply and the stock to flow model that Plan B and others have been talking about. Sendwire, Dropbit, a Ninja Coin partnering up here. Another very easy on-ramp where someone can buy $500 of Bitcoin directly with this Dropbit on Apple, on Android, no KYC or additional transfers. There are ways to get around that no KYC. I think under $1,000 in Australia, you can still do it relatively anonymously. But think about whether it's the Square app, the Dropbit app, the news agency. There is just a mountain of on-ramps. It's never been easier for people to buy crypto. And it's the developing nations with the billions of people that have mobile phones, smartphones. They can now take this option and park money in Bitcoin or a stable coin rather than their inflating local currencies. Finally, eToro, we got some news this week that they have partnered up with Delta. So a lot of you will be users with Delta. If you haven't been a Blockfolio user, this is the second most popular crypto tracking app. Look, eToro, I've got some big plans in the crypto space. That was one of the reasons they reached out to us and wanted to partner up. I've got some very exciting news coming with them soon in terms of getting more involved in balancing your portfolio with some gold, silver, and Bitcoin. We've got that promotion that's still running at the moment. For you Aussies, you get a 10% deposit bonus and you get $100 free Bitcoin from us when you sign up, make a deposit, and make your first trade there. So there's a link in the description below, guys. $100 free Bitcoin. Have a play around with their practice portfolio if trading's not your thing. But being able to short and make money on the way down if stocks start to crash, or just being able to trade bonds in these ETFs, I think it's a lifelong skill to have. Very easy to do on eToro. Alrighty, let's get into the technical analysis. So what we're seeing here at the moment is a continuation of consolidation since this huge move higher. Now, if we zoom in, we can see that the 200-day moving average had been acting as support, and we've been dancing along it a number of times. In my daily updates for members, I've been highlighting if we lose that, that is when we are likely to have a spill. And as you can see there, that was a pretty nasty candle and sell-off. So now we're having a bit of a bounce. It does look like we are forming another bear flag. We've had a bit of a jump of late since I've been recording this video, but really, guys, I think the likely scenario is, unless we get a nice strong close here and this volume increase, that these type of continuation patterns tend to lead to a leg down. So I'll just zoom in a little bit there. It does look like we've had a reasonably nice candle here. So we need more of these with the bigger volume compared to this consolidation as we've had here, because when we get these big volume sell-offs and then this chop around, it does tend to lead to lower price levels. On the daily chart, the RSI has had plenty of time to reset now. If we zoom out to the weekly, you can see that this can be viewed as a falling wedge, increasing volume here, then the decreasing volume, coming back to retest that wedge is a very common pattern that can still be viewed as bullish if we get a bounce there. So look, whether or not we do head down and test another lower fib level here, I think that this acceleration we had higher, it definitely was a bit of a pump by the whales. A lot of people were short, so I wouldn't call this a completely natural price movement, but I'd love to see us hold the 61.8%. At very least, that's 78.6 if we trickle down here and retest that channel. So at the moment, altcoins haven't been able to have their time in the sun. They really just have been following Bitcoin. And if Bitcoin remains range bound, that is the best opportunity for these altcoins to shine. So guys, that is it for this week. For more information on anything we do, head over to nuggetsnews.com.au. Otherwise, smash that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.